From the Cube studios in Palo Alto and Boston, bringing you data-driven insights from the Cube and ETR. This is Breaking Analysis with Dave Vellante.
We believe CrowdStrike has reestablished growth momentum while still working through the financial and reputational overhang of the July 19th, 2024 global outage. The company recently delivered net new ARR reacceleration ahead of expectations. It showcased very strong platform expansion across cloud, identity, and next-gen SIEM, what it calls its platform, those three, and leaned on Falcon Flex as a durable consolidation lever. In our view, the near-term debate centers not only on churn or flex conversion, which is a focus of a lot of investors, but more on net new ARR performance, valuation skepticism and concern, and whether identity and SIEM can offset a maturing core endpoint business while fending off intensifying competition from the likes of Palo Alto Network and CyberArk. The mainspring of CrowdStrike's success, in our view, remains its relentless product innovation, and increasingly, that is defined by its platform. We believe its unified platform and AI-driven threat defense at scale underpin the company's premium valuation through customer consolidation, stickiness, and durable ARR growth. Hello and welcome to this week's theCUBE Research Insights powered by ETR. In this breaking analysis and ahead of Falcon 2025, CrowdStrike's big customer event, we update you on our CrowdStrike scenario in the context of the cybersecurity industry. We'll share some financial metrics with key competitors. We'll look at how customer spending patterns have changed since last summer and identify key items to watch for this year's event. Let's start with a look at the performance of cyber stocks relative to the tech-heavy NASDAQ, something we like to do. Here's a one-year view of CrowdStrike, Zscaler, the Bug ETF, which is one of our favorites. And we've also added Palo Alto Networks and, of course, the NASDAQ, which, by the way, didn't benefit from the recent Oracle surge because that stock, as you might know, moved from the NASDAQ to the NYSE. So it missed one of the biggest movers of the year, biggest move of Oracle since the early 90s. Nonetheless, I digress. We see CrowdStrike and Zscaler here leading the pack. They're up more than 70% in the past 12 months. And diverging from what we've reported in previous breaking analysis episodes, the Bug ETF at 17% lags the performance of the NASDAQ, which was up 27% this past year as of this morning. Now, on a 5-year basis, we're not showing that here, but Palo, when you move it to 5 years, Palo's the king. They're up 390% in that time frame. But earnings unpredictability and some headwinds there, the concerns over its growth and valuation have investors a little spooked, pulling back for a period of time. And moreover, the recent $25 billion CyberArk deal weighs heavily on share prices, somewhat on share prices, not necessarily heavily. But we love that deal. It fits nicely with the platformization narrative, and it provides a more direct TAM expansion into CrowdStrike and Microsoft strongholds. The big number, $25 billion, but remember, it's a cash and stock deal, and Palo Alto is using its appreciated stock to expand its portfolio and its market opportunities. So we like it. Now, the financial picture has changed as a result of these factors. Here's a quick look at CrowdStrike, Palo Alto, and Zscaler. We're showing data from the most recent quarter, so revenue run rate, just the recent quarter times 4, the growth rate of that revenue, ARR, operating and free cash flow margin, cash on hand on the balance sheet, market cap, and revenue multiple. Note, Palo Alto's ARR reporting is they only report for what it calls next-gen security, which it says is growing in the 30% plus range. I think it was 32% last quarter. Now, what stands out here is CrowdStrike, despite the challenges it has faced over the past year, continues to command a premium valuation relative to Palo and Zscaler. Now, typical SaaS revenue multiples, generally they're going to be lower. They're going to be in the 5 to 8x range. And high growth startups that are losing money are going to be in the 10 to 15x range. So all three of these companies that we just showed you are trading at a premium relative to other software companies at north of 13, 15, and north of 20%, or 20x in the case of CrowdStrike. Now, what's remarkable about CrowdStrike is really the durability of its valuation. And take a look at the ETR spending data. That's really underscores the challenges that they've had to deal with. So this chart shows ETR's net score methodology at a granular level. Net score measures spending velocity on a platform, and it represents the percent of around the 400 CrowdStrike customers in the survey that are new logos. That's lime green at 7%. Spending more means 6% or more. That's 36% of those 400 customers. That's the forest green that we're showing here. Flat spending, that's at 43% in the gray. And then 8% spending, which is 8% spending less, meaning they're 6% or worse in terms of relative to last year. So that's the pink. And then you can see also 6% that are churning. That's the bright red. So when you subtract the red from the green, that is the blue line that we're showing here. That's net score, which is right around 30%. Remember, anything over 40% is considered highly elevated. And also remember, CrowdStrike at its peak last summer, before the incident, was well over 50%. But you can see that yellow line is Pervasion, which measures the account penetration within the sector. So you can see it's sort of a little dip there, but then it's been popping back up. And so the impact of last July was meaningful because you can see here, look at the green coming up or post July. It really compressed significantly, and then you saw the red bounce up dramatically. It's not back to its pre-July lows. But now you can see both of those are moving in the positive direction as well. The fat middle in the gray is also declining as the green grows and the red declines. So those are very positive signs. It's quite impressive given the fast time frame in which CrowdStrike had to rebound in the context of last year's customer disaffection. So in a flash survey conducted by ETR last July, the day of the incident, 96 out of 100 customers that they contacted were impacted by an outage. 46% of those that were contacted said the outage was significant or extremely significant. And at the time, 44% said they're likely to replace CrowdStrike, and 58% said that they were reconsidering their plans to consolidate around CrowdStrike. So obviously that was a very stressful time for CrowdStrike. And customers, they cited numerous options in their security stack that they were considering, as we're showing here. Now, this survey was taken last April. So ETR has done several snapshots on this. One in July, they did another one, I think, last October or October 24, and another one this past April. So this is the April one. At that time, the percent of customers saying that they had firm plans to replace CrowdStrike was 10%. So that was a sort of a new data point. They hadn't asked that before, but it kind of coincides with the red that we just showed you earlier, a little bit higher, but somewhere in that ballpark. And 24% said they were still contemplating replacement. Again, that relative to 44% last July who said they were considering a replacement. And when asked which firms they evaluated, Palo Alto and Microsoft led the list. They stood out. SentinelOne, with its endpoint credibility, was number 3, and Cisco and Fortinet, with their large portfolios and footprints, especially Cisco, were also considered, as were some others, as you can see here. But what happened is CrowdStrike did more than go out on an apology tour. They were transparent about what happened. I'll make a comment about that in a moment. They took responsibility and implemented an aggressive customer care program anchored by Falcon Flex. So let me explain in more detail. So after the July 2024 outage, CrowdStrike moved quickly to preserve customer trust with a customer care program, CCP, that bundled steep discounts, credits, and it also added support to offset disruptions. While the program created short-term revenue headwinds and an expense, management used it strategically to seed Falcon Flex, which is a flexible licensing model that allows customers to onboard quickly, consume modules as needed, and then seamlessly, I hate that word, but seamlessly expand into adjacent solutions. So by delivering CCP through Flex, CrowdStrike they hope to turn a crisis response into a platform tailwind, and it appears that's what's happened. So based on the data, customers not only stayed, but often expanded, with many early adopters reflexing into larger commitments. This strategy cushioned churn risk, it deepened stickiness, and positioned Flex as a durable growth lever that now anchors CrowdStrike's long-term path to a $10 billion ARR. So it was the combination of CrowdStrike's transparency and the CCP, and importantly, it's not that easy to migrate. That was the other factor. So CrowdStrike is sticky. So we reported on this several quarters ago, but it's worth emphasizing again. 81% of customers indicate it's not so easy to migrate off of CrowdStrike. Why is that? Well, Falcon's agents, their sensors are deeply embedded into the operational infrastructure of its customers. So replacing CrowdStrike means you got to rip out those sensors from tens of thousands of endpoints. But more importantly, the processes that are essentially fossilized at its customers, within its customers' procedures, the processes and procedures and the skill sets built up around CrowdStrike and Falcon are substantially difficult to do over, has major impacts across the organization. The operational and compliance risks, they make the business case very negative. I mean, anybody who tries to do it without thinking about the business disruption could be in for something much worse than what they experienced on July 19th over a much longer period of time. So now I just want to take a moment to give a word on CrowdStrike's response, as they are not out of the woods yet. It's generally expected among enterprise customers that we talk to that CrowdStrike acted with above average transparency compared to industry norms after the incident, particularly because many security vendors, they bury the details, kind of somewhat hide the ball. Now, that said, for those directly impacted, there's a lingering perception that the company was more focused on damage control at the time than full disclosure in the early hours, which frankly is okay by us. We know for a fact that CrowdStrike mobilized its resources to help customers get back on their feet, and in our view, this was more important at the time than putting more, taking resources off that and putting more resources on figuring out what exactly happened and communicating that. So CrowdStrike's future performance, there's still a hangover there, and it's not without risks, as we showed earlier in its evaluation. It's a premium price stock. But let's take a look at its platform approach in the ARR growth engine, because this we think is critical to its future and that path to 10 billion. So its latest disclosures, they really highlight the importance of its platform business. So there's next-gen SIEM, there's identity, and there's cloud. And together, they are the platform that accounts for about 1.6 billion in ARR, roughly a third of the total. And this is where the growth engine is. SIEM stands out as the fastest growing segment at 95% year over year. Cloud leads by scale with 700 million in ARR, and that's a business growing at 35% annually. Identity is smaller, but it's strategic. It's relatively new, surpassing 435 million in ARR. It's growing at 21% year on year. So the takeaway is that CrowdStrike, they're no longer, you can't think of this as just an endpoint company. It's a platform. And George Kurtz, he likes to say that these businesses are large enough to be IPO-able in and of their own, on their own. Yet because they're integrated through Falcon, they reinforce this consolidation thesis, the platformization. That's Nikesh Arora's word, but it reinforces that consolidation thesis and justifies a platform premium in our view. So we think that the whole together is greater than the sum of its parts, with Flex accelerating adoption across modules and embedding CrowdStrike deeper into enterprise security stacks. So we expect to hear lots about platform at Falcon 2025. And of course, it's going to be heavily laced with AI. But let's take a look at what we think is coming at the event and its concomitant financial analyst meeting. So CrowdStrike remains one of those cybersecurity companies that's got both the scale and the innovation velocity to justify a premium multiple in our view. The July 2024 outage, no question, there was some scar tissue there. There's financial legal, reputational, all that. But it also accelerated the company's shift toward Falcon Flex, which is a contracting model that deepens customer stickiness and fuels multi-module adoption, with SIM, identity, and cloud security now accounting for more than a third of ARR. CrowdStrike has transitioned from an endpoint leader and really a kind of a point product company into a true platform consolidator. And so this is going to be a case study at business school in the future, how to turn a disaster into an opportunity. So at Falcon 2025, investors should look for proof points around Flex becoming the default model. We think that is the future. And then, the removal of the customer care program, that's happening now. So that's going to create some headwinds and some uncertainty. So we're going to be looking for clarity on fiscal year 27 ARR growth and evidence that AI-led innovation is extending the company's moat. Remember, we've reported before, CrowdStrike has a long history in AI. So we believe that the ecosystem leverage as well and the partner expansion, which has really ticked up since our first Falcon 3 years ago, further will validate CrowdStrike's path to that $10 billion in ARR by fiscal year 31. So bottom line, CrowdStrike, they're navigating through choppy waters with resilience and really exceptional leadership by George Kurtz and the management team at CrowdStrike. They are top shelf in our view. The platform is sticky, the innovation engine is intact, and the company continues to define the direction of enterprise security, along with Palo Alto Networks and others, including Microsoft and the hyperscalers. The central question is not whether CrowdStrike is a best-of-breed player. Of course, it clearly is, but whether the market is going to continue to reward its platform premium as growth normalizes and competition intensifies. In our view, the evidence supports that premium, provided execution stays on track. Okay, that's it for now. Thanks to Alex Meyerson and Ken Schiffman on production and in our podcast, and Kristen Martin and Cheryl Knight help get the word out on social media and in our newsletters, and Rob Hoth is our EIC over at siliconangle.com. Thank you all. Remember, all these episodes are available as podcasts wherever you listen. Just search Breaking Analysis Podcast. I publish each week on thecuberesearch.com and siliconangle.com. You can email me at david.vellante@siliconangle.com or DM me at dvellante or comment on my LinkedIn posts. Get in touch, please. And check out etr.ai for the best survey data in the enterprise tech business. This is Dave Vellante for theCUBE Research Insights, powered by ETR. Thanks for watching, everybody, and we'll see you next time on Breaking Analysis.